Jim Rogers, Hot Commodities, How Anyone Can Invest Profitably in the World's Best Market. Embark on a journey through the world of commodities and discover how you can secure lucrative returns in today's fast-paced markets. With this summary of Jim Rogers' Hot Commodities, uncover the essential nature of commodities in meeting basic human needs. Understand the emerging influence of China's insatiable appetite for resources, and learn about the long-term trends that support a continued bull market in commodities. Through examples and insights, this summary will guide you in determining the right investment strategies and appreciating the role of commodities in a balanced portfolio. Get ready to defy conventional wisdom and become a savvy, fortunate investor in the commodities market.
Seeing the signs. In the 1920s, Bernard Baruch sold all of his stocks after realizing even a shoeshine boy was giving stock tips. This incident foreshadowed the impending Great Depression. Luck is not always luck. Jim Rogers' successful predictions on energy and commodities. In the early 1970s, Jim Rogers predicted that it was the ideal time to invest heavily in energy to a hedge fund manager, just a few months before the OPEC oil embargo happened, leading to skyrocketing prices. Rogers took advantage of the situation while his friend ignored his advice, which was eventually termed as luck by his friend. Almost 30 years later, in 1998, Rogers examined the commodities market after observing the continued rise of certain tech stocks but found that commodities were undervalued. With high-tech equities overshadowing the commodities market, the largest brokerage, Merrill Lynch, even decided to close its commodities practice. Rogers, however, quietly moved into commodities and established the Rogers Raw Materials Index Fund, based on the Rogers International Commodities Index, RICI. When the dot-com bubble burst, Rogers' index rose 190% by October 2004. Despite Wall Street wags insisting that Rogers only got lucky twice, he believes that anyone who invests wisely in commodities today can find similar success. His predictions on both energy and commodities demonstrate that luck can be created by keen market observation and smart investment decisions. Why commodities are the future. Despite objections from experts, commodities remain a stable investment choice. They offer basic human needs that technology can't replace, and their prices aren't as volatile as some blue-chip stocks. China's increasing demand for commodities means that a bull market will likely continue for years to come, even for the long-term investor who thinks they may have missed out. While investing in commodities can carry greater perceived risks, education is key to making wise decisions that can result in significant gains. Successful commodity trading. Successful commodity trading requires understanding personal trading biases, researching target commodities, and knowing the four main elements of a futures deal. Selling long and selling short are two ways to invest in commodities, and a stop order helps limit risk. Commodities often outperform stocks, bonds, and real estate, but investors should be careful with leverage when using margin. China's rise and its impact on the commodity market. China's potential to become the next superpower is undeniable, with the world's largest economy predicted in the next 20 years. Its rapid growth and development make it a promising investment opportunity, particularly in the commodity market. China's consumption of commodities like copper, steel, iron ore, soybeans, and energy products has surged since 2002, making it the world's largest consumer today. However, its leaders must balance growth with stability to provide a soft landing for the economy. Additionally, China faces the challenge of navigating its conflict over Taiwan. The book highlights the author's belief that the best way to capitalize on China's growth and rising capitalism is to invest in commodities, making the commodity market an attractive and promising bet for investors. The untold truth about oil prices and global economy. The 2004 oil price hike revealed America's lack of preparedness towards oil prices. The world's oil reserves from potential sources like Russia, West Africa, Venezuela, Iraq, and Canada face challenges. The demand for oil is expected to rise, particularly in Asia, but global capacity is not invested enough to refine and transport oil. The book highlights the potential of investing in commodities, dismisses the myth about their riskiness, and instead encourages investing in them. The book presents an eye-opening account of the world's oil reserves and the global economy. The 2004 oil price hike revealed the U.S.'s unpreparedness towards oil prices. The exact amount of Saudi oil reserves is unverified, and potential sources face a variety of challenges. Russia's leaders want to cash in on oil reserves, but corruption and mismanagement stand in their way. West Africa has plenty of reserves, but political corruption is the root cause of big problems. Venezuela's oil industry faces potential destruction due to leftist leader Hugo Chávez's actions. Iraq's sabotage prevents it from scaling up production, and Canada's oil is difficult to extract. Despite challenges from potential sources, the demand for oil is expected to rise, particularly in Asia, as investors are not investing enough in refining and transporting oil. The book busts myths about the riskiness of investing in commodities and encourages investing in them. Therefore, the book is an excellent guide for investors seeking to evaluate the oil market's intricacies and play their bets right. Investing in commodities. Commodities present a valuable investment opportunity during the current bull market. While gold is a good insurance policy, other commodities such as lead, sugar, and coffee offer higher returns. Lead prices are likely to rise due to supply and demand imbalances, while sugar prices will increase as demand continues to rise globally. Coffee prices will also increase with rising demand, but investors need to beware of bull market hysteria. Despite brokers associating commodity trading with risk, commodities have outperformed stocks and bonds since 1959 and present less risk than equities. Investors can make an even higher return on commodities during times of inflation, making it a necessary addition to a balanced portfolio.
Jim Rogers' Hot Commodities has equipped you with the knowledge and the confidence to step into the realm of commodity investing, breaking free from the fear of risk that hinders many. Realizing the indispensable role of commodities in meeting our essential needs, you now understand why these assets will always hold value. Moreover, witnessing the exponential growth of China and its substantial consumption of resources, it becomes clear that the commodity bull market is here to stay. Being prepared and well-informed, it's time to embrace the opportunities offered by this dynamic market and unlock the fortune that awaits you in the world of commodities.